Hey there, beautiful traders, welcome back to my channel. My name is Desmond Samuel and I'm back with yet another episode of our weekly Forex Forecast. Now, if you're coming across this channel for the first time and then you're wondering what this series is all about, so this is just a start of my YouTube channel that I've actually put aside to comment on here every single weekend to give you guys the best trading setups and then also take you guys on like a review of our past trades. Now, if you're coming across this video, I like to assume that you actually want to make money, so I urge you to sit right back there and watch this video all the way through to the end, and then also leave a like and comment, plus share and then subscribe to this channel. All right, so the first pair now on my list would be the euro dollar. I mean, you guys, this is practically one of the easiest pairs to actually trade in the foreign exchange market. And as things stand here, I've actually been in a range for quite some time now, quite indecisive as far as I'm concerned. This guy hasn't really given me a decisive direction. All right, he just keeps bouncing in and out in between these two levels here. First of all, we have this being the supply level, and then this also being the demand level. So this is practically just bouncing in and in between these two zones here. So what we need to do right now is look at things from a grand standpoint, and then first step is being on the weekly time frame. Now, as things look here, we've actually had like a downward run for about 2 years, and then we've actually come on into this range. Now, this is explainable in the sense that now after an impulsive move comes a correction. So the market only trades for about 40% of the time, so the rest of the 60% was stuck in a range. So now we had this collapse here, which lasted for over a year here. We had this collapse here, thousands of pips to the downside, and obviously, to complement this entire drop here, the market has to be in a range. So this is also something that a lot of traders do not pay attention to, because they just keep buying and buying and buying, forgetting that you have to count your waves. Number one, you also need to know that after an impulsive drop like this, there will always be a correction. So now, whether or not this correction will lead us to continue downwards, it's entirely up to the market. But one thing is for sure, after an impulsive move comes a correction. This is an impulsive move. So what we are currently experiencing, or what we've been experiencing for the past year now, is just a correction. Or almost 2 years right now. All right, so now as things look here, judging from the current price action, we've actually come into some really delicate supply levels, and then we just collapse all the way back down there. All right, this is about hundreds of pips to the downside here, and now we've actually tapped into a really solid demand level, and so far so good. The market has had issues breaking back down. Now this is just how things look on the weekly time frame. So let me see if there is a criteria for us to use the monthly time frame. I just want to see how things look across multiple time frames, so we know exactly what we're dealing with here. All right, so in this case, we've had like a decent engulfing candle which happened on the monthly time frame. So this is how things look on the monthly time frame. Yeah, so we had like this whole thing is still pointing south as far as I'm concerned. So if I go ahead and plot my trend lines, like so, you can see that we've actually broken out of this downward trend line, and we're currently testing the outer part of it like this. This is where we sat. All right, we're currently testing the outer part of this trend line like so, as you can see right here. So this is more or less a breakout retest and a potential continuation if and only if the dollar would weaken. However, this is entirely up to the dollar as things stand here. I just had to point that out so that you guys will actually understand that this is exactly. All right, so this is entirely up to the market as far as foreign exchange market is concerned. This is entirely up to the dollar. Should the dollar remain bearish, we would most likely say reversal to the upside, or should we have like a strengthening in the dollar, this guy will continue to drop as he has done here. Now this is out of the way. Now I'm not a really big fan of plotting lines all over the chart. This kind of like makes it look nasty. So I like to keep a clean chart always. So as you can see here, we're actually stuck in a range as far as this guy is concerned here. We're stuck in a range. We're just moving sideways. There's no particular direction that we're headed here. As far as I'm concerned, we are in a box. This is the box here. Okay, so now this is where the box is. Let me just show you guys the box. The box. This is where the box is. All right, so just clone this guy real quick. Yeah, so this is where we're at currently. Okay, now I'm not saying that in between this bar and this bar that we won't find trades. Obviously, we can find lots of trade opportunities once we scale onto the daily time frame or even the 4-hour time frame. Matter of fact, I can have a trade open on this pair here where I'm looking to buy the euro once again. All right. So as things stand here, this is where we are at now. We came into this really solid supply level, and then we'll actually reverse all the way back down from there. Okay. Now we didn't just reverse say is a double top. All right, so after printing a double top like this, now what comes after a double top is the break of the neckline, and that has been checked. So what we need to see next is a retest of the neckline before we actually continue in the direction of the breakout. So in the case of this chart pattern here, this being a double top here, what we need to see is for the market to pull back into this level like so. Let's see this level. This is where the neckline is, right? So this was where the market broke out from with this engulfing pattern here. So now what we need to see is a pullback into the neckline here, which happens to be around this level where this bar is here. So let me just go ahead and extend this guy real quick. So we need to see something like this. We need to see the market pull back in there, and then now this is also sitting on a very solid demand level now, mind you. Okay, I'm just using these lines now because I like to just point out things. I don't want to plot too many lines on my screen. So this is a chart pattern here. This is a double top. Neckline has been broken, and also a supply level has been created here. So what we need to see is the market to just pull right back into that supply level, and then before we even collapse further, if we're actually going to keep dropping as far as the euro is concerned, before we collapse further, we need to see the market pull back into this neckline here of this double top. Then we actually get to see how the market reacts from there. Are we going to break above our head higher? Is entirely up to the market. All right, so but as far as things stand here, this is where we at on the euro dollar, and once you get out to the 4-hour time frame. So for those of you guys who are actually quite aggressive, that you're looking for a buying opportunity here, what you need to see is just wait for the market to bounce off of here. This is the neckline of this double top, this double bottom rather. So once you see the market bounce off of here, now entries are made. Then stops always have to come around this low right here. All right, never put your stops in here. Put your stops at the bottom. See, put the stops according to structure, literally. So this is a low, this is a high. So if you're taking a trade here, your stop losses must come below this low here. That's exactly how you trade. All right. So obviously the first level target would be this neckline that got broken here, and then in the event that we do surpass this target here, we have our final targets at this very top here. All right, so that's just that for the euro dollar. The next pair on my list now is the pound sterling. So the pound sterling also has like it has been slowing down in some form. I would say like it has maybe lost some form of momentum to the downside, because recently we've actually been struggling to make any new lows on this pair. We've just been stuck at this point here. So let me see how things look on the weekly time frame real quick. So on the weekly time frame, this is how things look. We are actually sitting on a very solid demand level here. So the market is just taking its time to decide, all right, if it's going to go higher or if it's going to drop lower. All right, so it is entirely up to the market to decide. So this is how things look here. So this pair has actually been collapsing to the downside. Obviously the same thing with the euro, and then we actually started to print in some series of higher highs and higher lows in here, and then we came in here to put in some form of chart pattern. So this is the head, shoulder. This was a neckline that got broken out. Then this was that demand level that the market bounced off of, and then now the market is actually sitting on that demand level, and it has sat here for quite some time. For 2 weeks now, the market has sat on this demand level. And one thing is for sure, whenever the market slows down like this, it could be a sign of weakening, and then also a potential reversal all the way to the upside. So now as things look, this is where we are at as far as the pound sterling is concerned now. So in the event that we do actually hold like that, this neckline here holds, this bar right here holds, then we could even see a reversal on this pound sterling to the upside. Okay, so my first target will always be the recent high, then subsequently we could actually rally into this blue bar. So if you look at things from a grand standpoint, this is where we are at. So we have the first touch of this trend line, second touch is too thick, sorry guys. So now I don't really advise people to plot their trend lines on the weekly time frame if you're looking for entries, right? Because it's not really ideal. That is too large. So what you need to do is come to the daily time frame, right? So reduce this guy into like so. Okay, then come on the daily time frame and look at the most immediate trends there. So this is the low here. This is the low. This is a high, higher, low, higher, high, higher, low, higher, high. So you want to go ahead and connect like two or three, two trend lines. Now in this case, we're gonna have like two trend lines. One will be the outer, and one will be inner. So this is exactly how it looks like. So this is outer trend line here. Okay, so this just connects the first the first two bottoms here, as you can see. So now dealing with the most immediate price action here, this is exactly what this channel will now look like. We'll plot this one on the inside and then this one on the outside here. So this is how things look, and currently we seem to have broken out of this inner trend line. Okay, so I'm just going to get rid of the outer trend line because the market is still far from it. But peradventure that the market, should the market break below here, we will actually need that trend line back. So just have that at the back of your mind. So now the market is currently sitting on a very decent level here, in the sense that this is also a Fibonacci play, right from swing low here to swing high. This is where the market is sitting on Fibonacci 0.618 region, and then also a demand level, then also a trend line level. So now what we should actually be looking at for on the 4-hour time frame is this: if this market indeed wants to continue higher, it is going to have to come back and break above this trend line that it actually broke back into. Break above this trend line here, give us like a daily engulfing candle or maybe a 4-hour engulfing candle. The entries are made and the stops always have to come around these lows here. All right. So setting your price targets here, in this case here, we'll have to work with this recent high. So our first level target will always be this recent high, and then once it's cleared here, we have space all the way to this blue bar right here. Now I always urge you guys to always come back and watch this video so you can actually notice this price point I'm calling out, and then you know how to actually go about plotting your trades in the coming week, so you don't mess up and then over trade or use a more aggressive stop loss. All right, so just use the stop loss according to structure. So the next pair now, I called out the pound card to the upside, and so far it has been blazing all through. All right, so it's just been destroying every single obstacle of the way, and we are still en route to my prime target, which is around this bar here, which was a weekly low, a weekly high rather in this case, because I actually like to set my targets on the weekly, because so the idea is to find a pair that has the potential of trending for maybe 300 to 500 pips, even 1,000 pips. Then you now scale on to the lower time frame, plot your trades there, and then hold in the direction of the overall trend. So in this case here, now we're actually headed higher. So I just had like a lower time frame entry with the gang, with the rest of the Telegram community traders, and also my Twitter traders, and then we actually had entries inside of here, and then we actually wrote this guy all the way up. So my prime target for this guy is this green bar right here, and then once we clear this base, once we clear that peak, we have space to the upside, which I always come back here every single time to let you guys know what we're going. So once we clear this peak right here on this pound card, we have space to this yellow bar right here, which I will always come back here to let you guys know how to actually go ahead to navigate that. Which is why I urge you guys to subscribe to my channel, turn on the bell icon, so that whenever I drop a video like this, you'll be among the very first few to see and capitalize on it. All right. So the next pair now on my list now would be the Aussie dollar. The Aussie dollar has been very disappointing, I'm not gonna lie, to say the least. I actually expected this guy to actually blaze through to the upside. However, it just keeps melting, and now this is where we are at the Aussie dollar. So now for AUDUSD, we had like a third touch of the trend. That I've done this breakdown on my previous videos. If it doubts me, you can always go back and check, go back and verify, guys. I have documented my entire journey here, so I have absolutely nothing to hide from you guys. You can always go back and check my records. All right, so this is the first touch here, second touch, third touch, and the market is actually sitting at the midpoint. So this midpoint reverses this price in the year 2023. I can remember trading this guy, and we were just talking this range here, going up and down, just struggling to actually make any progress, because this was just linear. So as far as things stand here, the market has actually come into very delicate demand levels, which is somewhere around here, and then this was where the market reversed from in the past. This was reversed from in 2023. Reverse from again here. So the market could easily come in here and then even pose a threat to continue higher. So as things stand here, this is the deciding point for the Aussie dollar. Would we actually break below and continue lower? This is the deciding point here. This green bar here is what we decide if this pair would actually collapse further or even reverse all the way from here. But as things stand here, we are actually approaching very solid demand levels here, and in this case, this also happens to be a Fibonacci play. All right, so this is from swing low all the way to swing higher. The market is coming into some really decent 0.61 region, which always happens to reverse price in history. All right, so But overall, this guy is bearish. The Aussie dollar is bearish overall. So overall, this guy is bearish. The Aussie dollar is bearish overall. But you know how things go. This guy could easily bounce off of here and then continue higher. All right, that's just that for the Aussie dollar. I'm still watching this guy closely to see how the market will react around here. If I see a decent bounce off of here, maybe on the 4 hour time frame or maybe on the daily time frame, I see one candlestick engulfing, I would definitely be executing this guy to the upside. All right, so the next panel on my list would be the NZD is also very tricky. It's been melting for some reason. I don't know why you're melting. All right, so NZD hasn't really been the best of the pairs to trade so far. That's just been collapsing, pissing me off, to be honest. So let's talk about gold. So gold on the other hand here has been making new highs every single week, guys. Every single week gold blazes. It just keeps giving us new highs. All right, I don't know what's making go rally so much, but this guy just keeps giving us new highs. All right, so enough of the blabbing now. Let's dig into the technicals. All right, so let me show you guys what is actually going on gold here. So you guys know yet again now, whenever the market is in a range like this, in this case here, this was where the market was in a range. All right, so as of the year 2020 all the way to 2022, we actually broke out of here to 2023. This guy has been stuck in this range. All right, it has been stuck in this range here. So now there is a principle in trading that states that the total amount of pips accumulated in a range, once market breaks out of that range, the market will most likely rally into the tune of that the accumulated pips there. So once you pray that and then you now bring out your tool, you can see that the market is even doing a lot more than that in this case. Now we have actually hit our first price target, which was right around $2,600 per ounce for gold. I caught that gold right from I think somewhere in July. Now if you doubt me, you can always go back and check. I caught out this price ever since the inception. I said that gold was going to get to $2,600 per ounce, and currently we are actually sitting at $2,790 per ounce. And my price projection for gold, so new price projection is $3,000 per ounce for gold. So what we need to be looking out for now is a pullback, because so how do we capitalize on this thing now? So what we need to be looking out for now is the pullback, because you stand a better chance a better chance of making money once you actually ride the trend. All right, so in this case here, on the daily time frame, we do have a trend on our hands. We will see series of higher highs and higher lows here. We've had this high, this low, this is a high low, higher low, higher high in this case. So what we need to be looking out for is for gold to actually pull in into this bar right here, come in and test this trend line, give us more or less like a touch of the trend line, and then we'll actually be very confident about buying this guy to the upside. All right, so on the 4-hour time frame, this is how things look. I see no reason as to why we would not pull into this bar right here to just give us some form of pullback for us to actually continue higher. Now in the event that doesn't happen here and we actually come and stall somewhere around here and the rest, so this is where I'll be looking to buy gold as well from, in the event that this guy does not drop lower. So I'll be watching this guy closely to see how the market behaves around this demand level here, around 2,720 demand level. Once I see some form of lots of momentum slowing down and then I see an engulfing candle, I'll definitely execute this guy. And my stops will always be below structure. Then my prime target will be at $3,000 per ounce, because guys, like I said, your only advantage here is to just find an entry and just ride the trend. Right, do not try to dabble in and out, because you most likely get burnt, because this is a very linear stretch here. If you look on the higher time frame, this is a very linear trend. And one thing about linear trends like this, you never really know when the pullback is due, like in the sense that it could be coming down for, in the sense that you never really know when a deeper pullback is due. You could be coming down for a very deep pullback, but you would know. So in this case here, just find a decent consolidation somewhere around here and plot your entry and then put your stops where they ought to be and ride the trend. All right, so the next panel on my list is silver. Also has a very decent potential, although I haven't really seen much of activities on silver in terms of giving us a very decent entry. But one thing I would say is if we look closely at silver here, we are definitely heading higher. That is for sure, because I actually called out in silver. Now for those of you guys who are actually doubting me, I called out silver right from right from this point here, which is right about $26 per ounce for silver, and I say we are definitely going to slam into $35 per ounce, and that is exactly what we've done so far. And now looking at how things stand, we need to actually come in and test this demand level right before I actually continue higher. So as gold is pulling back, silver is also pulling back, and as you can see, we broke out of this downward wedge pattern here, and then we actually went ahead to create a demand level. So what we need to see is market needs to come into this demand level, which is also a Fibonacci level, and then also a trend line level. So once this is set and done here, I'll definitely scale down to my 4-hour time frame. If I were you, I would subscribe to this channel so that whenever these things play out, I will not miss out. All right, so I'll definitely scale down to the 4-hour time frame, look for a decent entry opportunity here and there, and then I'll execute this, guys. So enough of this ugly trend lines here. Okay, so this is what we're working with. So what we need to see is the silver needs to give us that dip back down to $31 per ounce. Then we can actually blow this guy through the roof. First of all, target will be $35 per ounce, and if we indeed break above here, which is very likely to happen, we would have space all the way to $48 per ounce for silver. I think that's that for silver. I see no reason as to why this should not happen. All right, so that's just that for silver in a nutshell. Now guys, if you found value so far in this video, I urge you guys to go ahead and click that subscribe button, turn on the bell icon, and then leave a like and comment. All right, so the next pair now on my list is the AUDUSD. AUDUSD is still stuck in a very indecisive pattern. All right, I'm not seeing a very decisive pattern here. You see that above this trend line here, and then this is still very nasty to look at. So that the next pair now on my list now is the S&P 500. So I have been waiting for S&P 500 for some time now to actually just come into my demand levels. So as things stand, the market is actually headed to my demand level here. So what I need to see is a decent bounce off of here, then we're actually good to go. So for S&P here, the market has been giving us a series of higher highs and higher lows, and we got on here and then we put in some form of inverse head and shoulder pattern. We'll have the head, shoulder here. Then this was a neckline that got broken out, and then it's currently being tested here. So what we need to see here is very simple. What we need to experience here, we need this market to give us some form of a deeper pullback into this region of 5,670, 679 region around here, and then balance out and give us that bullish engulfing candle. Once we see that engulfing candle here, entries will be made, and the stops always be below here. My prime target yet again for S&P 500, if this back hold remain at 6,400 basis points for S&P 500. I'm saying this here again. My prime target for S&P 500, if this bar holds here, this bar holds here, we have space. We are definitely headed to $6,400 per 6,400 basis points for S&P 500. All right, so the last index now should be Nasdaq. Is not really giving us that much of an opportunity. Let's talk about the DAX index. So for German 30, the German 30 also has a very similar pullback, which is something that I had been anticipating for a very long time here. So now DAX has actually come in here into my level. So now we are playing around this demand level that I called out, in my previous outlook. So what I need to see is one more leg down to this downside. Once I see that one more leg to this downside here, then I'll definitely execute this guy. Now for the DAX index, is very simple. Entries have to be made somewhere around this bar right here, and the stops are below here, and then you should ride this guy all the way up. Now for the DAX here, my target for DAX is 21,000 basis points for the DAX index. All right, so but we first of all need to see that one leg down to this yellow bar before I actually continue higher. I see no reason as to why that shouldn't happen actually this week. I think I'm going to execute this pair by Monday or Tuesday. I'll look at this guy closely and see if we get that decent pullback, then by all means I'll execute this guy. So the next pair now is BTC. BTC on the other hand now is very tricky. BTC has failed to break above the all-time highs. I don't know what's happening with BTC. So for BTC, this is how things look on a monthly time frame. Okay, actually let me just go ahead and use the weekly time frame. Monthly time frame isn't really looking that decent. So for the weekly time frame on BTC, it's very annoying in the sense that this guy is stuck in the range. However, if you look closely at BTC, we are currently respecting a very strong supply level here that was formed on March 2024 this year, and then it's currently holding up until this point. Now the market could pretty much easily collapse and then fall all the way back down to this point here, or we could actually come into this demand level somewhere around here and then continue higher. Now one thing is for sure now, if BTC is coming all the way back down here. There are some criteria that has to be fulfilled, and in this case here we have a downward trend line. Okay, so the market has pretty much broken out of this downward trend line. As far as I'm concerned, it's currently sitting at a demand level. So what I need to see as far as BTC is concerned is the market needs to even come into this demand level and give me an entry, opportunity. Let me see that. Okay, fine, I can actually execute this trade somewhere around here. So once I see a decent drop into this $66,000 per coin here, I'll look out for something similar to this and engulfing pattern, then I'll go ahead to execute. That is even only if this level would hold. And then if we do break above here, then we have space to 100k. If for some reason we fail to break above here and we violate this $66,000 per coin region, we could actually dip lower all the way to $58,000 per coin for BTC. All right, so that's just how things stand. I'm watching closely to see whatever development will come up. I will always rush here to let you guys know, which is why once again I urge you guys to subscribe to the channel and turn on the bell icon, guys, for real this time. So now moving on to the yen pairs. Now the pairs that actually have the potential to get to make us money as far as Q4 is concerned and Q1 2025 is the yen pairs. All right, so now what pair is that? I think this is USDJPY. So for the yen pairs, now starting off with the EURUJPY, I have been calling out the yen pairs since last year 2023 to the upside. I kid you not, it has been an absolute beast of a trade. We've made money consecutively, like every single time I come on here to talk about the yen pairs. Best believe they are ready to milk us money. All right, so now from the weekly time frame, there was a trend and I was patiently waiting for the EURUJPY to violate, and it has actually done so. This was this upward trend line. So I was looking at this guy closely and I was like, bro, as far as we remain underneath this trend line here, anything was possible, because we could actually even what's the word, guys? Reverse to the downside. We could actually get to this point and then fail to break above, and then for some reason now dip back down. However, as things stand here, we've actually gone ahead to break above the trend line. So this is huge. This is thumbs up as far as entry is concerned. So now the next stop here is, what do we do next? What do we do next? So I kid you not here, if I were you, I'll go ahead to execute this guy. So take this from me. So come Monday or come Tuesday next week, go ahead and execute this trade, guys. Make sure that your entries are somewhere around here and the stops are below here, because as far as I'm concerned, we've broken out of this neckline here and we're actually headed higher. This channel has been violated here, so this is actually out of the way. So this pair is actually ready to blow to the upside. So let me see if there are any things that we need to consider. So it's good here. All right, so like I said, execute your pair and then put your stops below structure. You can actually put your stops below this point here, but the bottom line is your stop losses must always come below structure. Please do not by any means execute a pair and then put your stops around the entry point, hoping that the market will just keep going in your favor. The market could sometimes take a while before actually reversing to continue in your favor. However, that being said, my first level target for the EURUJPY, let me just call it out now, because I send this pair to my Telegram community, which, by the way, guys, I urge you guys to join as well, so you see all other traders and learn from them. So my first level target for the EURUJPY here is this supply level, which is somewhere around here at 171. Okay, EURUJPY first TP is 171. Once we place that level here, we have space all the way to 175, which is the second TP, and then subsequently we have space to 186. All right, so I take that again. First TP is 171, somewhere around here. Second TP is 175, and then final TP is 186. All right, so next pair now would be the Pioneer, which is the pair I'm actually long on. So I came on here to let you guys know that I'm actually long this pair. I actually had entries earlier on, somewhere around inside of here, somewhere around here. So this pair is currently running in profit. And how did I make this entry? It was very simple. All I had to look out for was a decent bounce off of this trend line here, and I can actually go ahead and get rid of this guy and also get rid of this guy, because everything now is balanced. So the market came into this demand level here and then bolted out with this pin bar. This is a bullish pin bar in the sense that the market has rejected off of this demand level, showing buying pressure. All right, and then the market even came on to give us, so on the weekly time frame you're seeing a double bottom, but then by the time you come on the daily time frame, you're seeing a never headed to this pattern. So everything is just pointing north. Buy. Everything in my mind is just buy as far as I'm concerned. So I did buy. Yeah, I did. I bought this price. So currently now I'm sitting in profit. This guy is actually headed in my direction here. My first level target is at 12, which was, oh, so we're actually going ahead to hit first TP, guys. We hit first TP on the pound yen, which was at 200 points here. So after that 200 price points, so after that my next level target would be at 208 price point. Then if we do break above that level here, we have space all the way to 216. Now how did I get these levels? It was very simple. All I did was do my own analysis on the weekly time frame. Then I kind of like look out for, you know, where price has had issues breaking above or below in the past. That would always be my price point. So in this case here, it is somewhere around here. Okay, so first TP is 208 around here, 213 actually. Let me just be precise, guys. This is at 215. All right, so my third price level is 215, and once this is cleared, once this is broken above, ladies and gentlemen, we have space all the way to 251, you know, which happens to be a huge price point. And you can see the series of rejection we had here. This guy has no other choice but to get to the equal highs. Once the equal highs get validated, a new high. Once the new high gets validated, guys, you make more money into Q1, Q2 of 2025. All right, so the next pair now. So for those of you guys who are actually looking for yen pairs to actually go ahead to execute, this is my trade call for you. CAD JPY is too early as compared to Euro JPY and pound yen. All right, so this is quite early. You can actually go ahead to execute this guy. So what you need to look out for is look out for any consolidation pattern somewhere around here. Look out for a way you can actually capitalize on it, and then put your stops always below structure. All right, so actually, by the way, guys, by next week Monday, I may be adding this pair to my positions here. I'll be going ahead to buy this guy here. All right, stops always come below structure, and then I'll look for some consolidation somewhere around here and then buy this guy. So my TP will always be the recent high, which is in this case 119, and then once we blaze through that, we have space to 122 for the CAD JPY. The next pair now is AUDJPY, which is also quite early. I sent this pair out to my Telegram community, which I urge you guys to go ahead and check it out, you know, in the comment section, and then also in the description box as well. For the AUDJPY is also very simple. We are about to blow out, and the only thing holding this guy back is the weakness of the Aussie. All right, this guy is ready to blow all the way through to the upside. So what you need to be looking out for here, just look out for an engulfing bounce, a 4-hour engulfing candle somewhere around here. Execute the trade, put your stop below structure, and then let the market work for you. All right, first level target is 104, and subsequently we should rally into 109. All right, that's just that for the Aussie JPY, the Aussie yen. Let's see if you have any other yen pairs that could potentially make us money. So let me call USDJPY. So I can't believe I missed USDJPY. So for USDJPY here, this is like the driving engine for the rest of the yen pairs. All right, so as far as the USDJPY remains bullish, every other yen pair is definitely gonna remain bullish. And in this case here, the USDJPY seems to have moved. I don't see any pullback opportunities for those guys who have actually missed out on the early trend here. So it's very simple. What you had to do was just look out for a bounce around here, and then go ahead to execute the trade. So that's just that for the USDJPY. I don't see any pullback here happening on this guy. If anything, we could actually continue higher. All right, so my first level target for USDJPY is 158, and once we blaze through that, we have space to 162, and then peradventure, in the event that the market has some more pips to render, we actually have space all the way to 178 for the USDJPY. All right, so now moving on to the last pair now on the list would be the yen index itself. Okay, so now all right, very confident in the fact. So part of the reason as to why I'm very confident that my yen trade calls are gonna bank is because I've done this before. Guys, if you doubt me, you can always go back and check my previous weekly forex outlook. I called out this collapse of the yen pair in the year 2023 January. I called out this person around it. I said that this guy was going to collapse, and he actually did. And it took the rest of the 2023 and 2024 market to actually play out this move. And the same thing is about to happen again. So the market, whilst collapsing, came on to create a supply level right somewhere around here like so. And as you can see here, once market creates a supply level As I always tell you guys, once the market successfully creates a supply level, the market will always come out to test it. So it created once, and then the third pullback is what always breaks the camel's back. So this was the first pullback. Meh, he didn't do that much. Second pullback, didn't do that much. This was the third pullback, which is really massive. So this guy would not only collapse past this equal low, it would even go ahead to give us even a new low, because by the time you measure and prorate this guy, this length of this impulsive drop here, rate it with this guy here, you can see that this guy has room to the downside. Okay, has room. So we have enough pips, enough to go. So from here to here, money. From here to here, money. So if you have not executed any yen pair, I urge you guys to go ahead and look at the CAD JPY, look at the Aussie JPY, and then also the Euro JPY for yourself. All right. So that's just that for the yen indexes as far as I'm concerned. Let's see what the dollar is doing. Although even with the euro dollar, you can actually pinpoint what the dollar index is doing. So the market is actually sitting at a very strong supply level as far as I'm concerned. I spoke about this guy in our most recent weekly forex outlook episode. However, it is still pinned at this bar right here. It is looking as if it wants to break above here, because this is a series of bullish candles. 1 2 3 4 5. This is looking strong. So it doesn't look as if this guy wants to rotate back down. However, we've seen this happen before, where the market just bolted through 1 2 3 4 engulfing wicks, 3 engulfing wicks, then just melted all the way back down. So this could also happen here. We had the same thing happen here, series of engulfing wicks, then melted all the way back down. So the market could even come back and then test this 102 region, which happens to be this neckline of this double bottom once it's get out to the daily time frame. However, as things stand here, whatever thing that the dollar chooses to do, guys, we're going to make money with. So in the event that the market does continue downwards, my target for this downward momentum will be at the 102 region, which happens to be neckline of this double bottom here. And the event that we actually break above here, then I'll always come back here to let you guys know what going. All right, guys, that brings us to the end of this episode of our weekly forex forecast. Thank you so much for staying true to the end. Yours truly, Desmond Samuel here, and make sure you leave a like and comment, turn on the bell icon as you subscribe. Make sure you share this video to every single trader like yourself, and then make sure you click the link in the description. Come to my telegram community, see how we do things there, see how we call out trades there. And guys, my trading course will be dropping this month. Yeah, I'll be dropping my trading course this month, and it's gonna be valued at $100, so you can actually go ahead and secure a spot for yourself before it even drops. All right, so in my next video, I'll be talking about how to trade supply and demand proper, because I've got a lot of comments asking me to do that. So I'll teach you guys how to go ahead and trade supply and demand proper. Go ahead and let's see how you can consistently and profitably extract piece from the market. All right, see you guys in the next episode, and peace out.